So thank you so much for the love that you guys have showed in the last video, and special thanks to Tom who gave me an opportunity to, you know, talk about the psychological topics, in trading on his platform. So for today, there are two major topics which I wanted to focus on. The first one would be building a trading plan, and the second one would be risk management. As you all know, these are the major two and the most important topics in trading. Okay, so let's focus and let's get straight to the video. Okay, before I start, for people who haven't watched my last video, probably I would tell Tom to add the link in the description so you can go and watch that video as well. And for people who don't know me, my name is Srijit Gosavi. I'm a trader and I am an account manager here at Oz Global, AUS Global. It is one of the largest financial brokers out here in Dubai, and they deal majorly into the forex market. So if you have any broker related queries, you can reach out to me anytime. All right. So coming back to the topic, okay, building a trading plan and risk management strategies. Okay, so I've noted down few points, so let's check that out. So for building a trading plan, the major and the most important things that you would need. Okay, the first thing is to set and have a clear goal and objectives. Okay, so how exactly would you define this? Okay, let's just elaborate a little bit. You can write about, you can have goals about your profit, about your losses, and even about your targets. And even about your targets. Okay, so for example, okay, let's consider that I take a trade here. Okay, I plan a trade. Okay, gold is just going bullish. All right, so let's say I buy gold here. Okay, this is not a proper setup, but just for your reference, I'm just showing. Okay, so here, if let's say my risk is around 5.93 ounces, so my target would be 1:2. Okay, so this 1:2 is my profit target, and 1 would be my risk. Okay, so how would I define this one? Okay, let's say on a $10,000 account, okay, I'm risking 1% of $10,000. Okay, that is $100. Okay, now $100 would be risked, and my reward in that particular trade would be $200. Okay, so how exactly would this be beneficial? Okay, let's elaborate and see. Let's suppose we take 5 trades, out of which 3 trades we have hit our SL, and in just 2 trades we hit a profit target. Okay, so what happens is, in these 3 trades we lost 3%, but in these 2 trades, the profit trades, we gained 4%. Okay, so overall in the 5 trades we are at 1% profit. Okay, you see the importance of having a proper goal about your profit, about your losses, and about your targets. So that's how and that's exactly why it is important to know your risk to reward ratio, and even plan things in a better way. Okay, so this will actually help you and improve your trading to an immense level. Okay, so now talking about my strategy a little bit. Okay, let's see. Okay, let me show you the chart. All right, so let's consider a 4-hour order block. Okay, let's try to catch this order block. Okay, if you can see, price has it has moved very beautifully from this particular range. Okay, so let me delete. Oh, I deleted my alert, no problem. Okay, So let's say price wants to move from this particular order block. Okay, so what as if you still don't know my strategy, you can go and watch out the last video. You'll understand everything. Okay, price has tapped into the 4-hour order block. I look for a 15-minute market structure shift. Okay, so if you can see here, market has given me, actually this is the particular range from where I would consider it as a market structure shift, and market has given me a structure shift here. I won't consider this part. The reason being, because this is just a wick but the body hasn't closed above this. Okay, so I would not consider that. All right, market has moved up, and after this we can see there is an order block here. Okay, why would I not take this order block? Okay, I'm pretty sure people have this question in their mind. I would have taken this order block as well. Okay, and if I would have taken this order block, I would have hit my SL. Okay, yes, you are right, but I would not take that order block. The only reason being, okay, let me check one minute. Okay, the only reason being, if for people who trade ICT, they might know this very well. Okay, this particular order block is above 50%. Okay, so this is in my premium range. Okay, and while buying, would you buy things on if the prices are already high? No, you would not. You would always wait for it to come to a discounted range, right? So probably this would be my perfect order block. Okay, this is still an extreme order block, and just because the price has moved between 0. 0.7 and 0.79 level, so this becomes my OTE. What is OTE? OTE is optimal trade entry. Okay, so majority of the times, if the price comes to this level, I usually look at it as a plus setup, you can say. Okay, so here let's say I'm planning to buy this trade. My SL would slightly be below this level. Okay, because the market has already tapped this order block, and this is the low that market has created. So it has come for an retracement, and from here I am looking for 1:2, and this is it. Okay, would I book my complete trade here? No, I would not. I would always and always and always book partials. Why is partial booking important? Let's say this trade goes till here. Okay, how much is this? This is almost 1:4 risk to reward. Okay, that's like if you're risking 1%, you are getting 4% on this account, on this particular trade. But is it practically possible for a trader? Let's just be honest with each other. Is it practical for a trader to hold this trade for so long? No, it's not. It's definitely not. So what we do, we book our partials at 1:2. Okay, we book almost 80%. Okay, 80% of the trade here. Okay, and then the remaining 20% we place our SL somewhere here, or probably here, or let's say here. Okay, and we let the trade move. Okay, that's exactly how you build your trading plan, and that's exactly how you set clear goals about your entry, about your exit, about your profits, about your losses, and about your targets. Okay, all right. So I book partials on most of the trades. Okay, but let's say I am counter trading, like this particular trade itself. Market has moved aggressively towards the sell side. Okay, so now would I, like, just because I'm planning a buy trade, so even if I book maximum 90 to 95% of my trade here, even that's a valid trade. Okay, because I am trading against the market right now. Okay, even though market has given market structure shift and everything, it has changed its direction, I understand, but it's the market that's handling. Okay, so you would have to respect it. Okay, so you never can predict the market. So always, if you're trading against the market, make sure that you move most of your positions quickly. If you're trading with the trend, then probably you have a chance to hold down your trades a little bit more, a little bit longer. Okay, so that's the thing. Sorry. Okay, so that's the thing. Now I spoke about the profit and the loss and how exactly can you divide your risk to reward ratio. Okay, for people who want to keep the risk to reward, between 1:1.5, even that's fair. Trust me, you can never ever catch consistently 1:5, 1:10 risk to reward trades. Okay, for people and who show that they're catching 1:10 risk to reward trades on regular basis, trust me that that's not how things work. Okay, so keep it very simple. I even said it in the last video. Keep the simple. Your trading is, it's easier for you to understand and execute as well. Okay, all right. So after this, once we have done with the text, hold on. Okay, here it is. Okay, so once we set our profit, losses, and targets, the second thing that we are going to look at is choosing your style. Okay, so how exactly do I do that? Okay, let's understand. Okay, let's keep everything aside for a moment and let's just understand what type of people should follow what type of a style. Okay, so how many styles are there? There are swing trading, there's positional trading, and the people's favorite, that's day trading. Okay, so swing trading. Okay, if you're a beginner, okay, and if you're not interested in looking at the charts, if you don't feel that charts is something that you're actually passionate about, but you still want to invest in the market and be updated with the trend, definitely go for the swing trading. Or let's say you have been in the market for 10 15 years, you know everything about the market, you're not interested to spend 10 15 hours, what do you could say, an hour or two regularly in front of the charts. Probably you can choose swing trading, no problem. You can just take a trade today, let's say, like just like now, just go to the daily chart, because swing trading, your go to time frame would be monthly, weekly, daily, and probably 4 hours or 1 hour for the entry. Okay, so you can see that market has tapped this OB, the daily OB. Okay, and it has tapped it and it has started moving up. Okay, so what swing traders would do, they would just buy at this position. Okay, buy at this position, probably keep your SL somewhere here and have a target of 1:2 if you want, or book this trade according to your comfort, because in swing trading you always have an option to hold the trade for as long as you want. If you still feel that market is going to go up, that's a very good thing. Take heavy lots here because you are anyway swing trading. Okay, take heavy lots, hold the trade, keep on booking partials. If the market comes down, for new traders I would recommend not to try this. Okay, because this is highly risky and it can blow your account. But for traders who have been in the market for at least a year, or let's say 2 years, probably if the trade is going against you, you can keep on averaging, like just like this. You have entered here and the trade is coming down, there is another order block here, probably you can add more quantities on this order block, or probably even after that you can add more quantities here. Okay, and keep on booking the trade according to your comfort. So that's how swing trading works. This is for people who don't who are very patient enough to hold the trade for long. You are not the regular market updates doesn't impact your psychology and everything. So probably swing trading is a perfect option for you. And for people who want to trade on probably positional trading is like, let's say you're holding your trade for probably 2 or 3 days, or probably sometimes you even book it in a day. Okay, so booking your trade in a trade comes into the day trading. But still, if you're booking on a higher time frame, if you're executing your trades on a higher time frame, that comes into positional trading. Okay, so you would have to decide that. Okay, for positional trading you need a lot of patience. Okay, new traders, I would request you, okay, this is not just a suggestion, this is a request to you guys, start with positional trading. Okay, because market will test everything from you. Okay, it will test your knowledge, it will test if you have patience, it will test everything from you. So positional trading will probably teach you most of the important things. Okay, and one of the most important thing in the market is having patience. Okay, so for new traders, I would recommend you start with positional trading, and then probably once you are comfortable and you start generating profits for at least a month or two, or let's say 3 months consistently, then probably you can switch to day trading slowly. Okay, probably you can take most of your trades in the positional trading, and then start your intraday trading. Okay, even that can be done. And for day traders, the most favorite of everyone, I would say, yeah, it's a challenge. Okay, but it's not impossible. Okay, understand yourself. Me being a day trader, probably I can recommend you things pretty well. The major challenges that the traders go through. Okay, in the first year you don't have an edge, you try a number of things, you try EMAs, you try Bollinger Bands, you try RSI, you try every possible indicator that you see on the internet. And probably after taking 2 or 3 trades you feel that yes, this indicator is working, this is my go-to indicator. And then after you start hitting 2 or 3 losses, or let's say 4 losses, probably you again switch your strategy, right? So please avoid this. Okay, and if you know things and you're still doing it, brother, you're not going anywhere, trust me. So please avoid this. Okay, start exploring things is not bad, I would say. In the first 6 months or a year, it is I always say this, that it is mandatory to explore things first. Know how the EMA works, even though you don't want to use it, but still know how it works. Know what is support, know what is resistance, know how exactly you can use it in the market. Sorry, and the most important point or the topic would be price action. Learn price action, learn what price is doing, know why it is going bullish, know why it is going bearish. Once you understand these parameters probably, looking at charts would actually fascinate you. And once it starts fascinating you, then your curiosity will probably teach you most of the things, rather than just learning topics. And once you see that yes, you have started reading charts in a better way, welcome my friend, welcome to trading. Start building your edge, have a proper edge, have an entry exit strategy, and have a trading plan of when exactly what exactly would you look at the market when you just open your charts in the morning. So would you go in the daily time frame, or would you go in the weekly time frame and see what's the market trend, and then probably book the major levels on the bigger time frame, that is 4 hour and 1 hour. Talking about my strategy, I look for an order block, or let's say the trend on daily time frame, and then I look for order blocks on 4 hour and 1 hour, and on 15 minutes and 5 minutes I look for a shift. And once I get that, probably I enter the trade after looking at the order block or a fair value gap. That's my strategy. Okay, that's my A plus strategy. And within the trend. Okay, within the trend probably I even take trades. Okay, so that's how things work. So you would it is important and it is mandatory for every trader to have an edge. So please build your edge as soon as possible. Okay, while building your edge, make sure that you skip all the distractions that come in your way. Just your random scrolling through your Instagram would definitely show you a lot of things, a lot of new strategies, probably a lot of new indicators which are 100% profitable and blah blah blah, but avoid it. Just stick to your edge. Take at least a bare minimum of 400 to 500 trades on your edge. Know everything about your edge, and then probably you would automatically start modifying your edge in a certain way that you would, you would know when to enter, when to exit, and when not to enter, and when not to exit, and when to just, just sit down, calm yourself, and be patient in front of the market. Because day trading is a difficult thing. Why is it difficult? Majority of the day traders, they don't have patience, they don't have self control, and that's one of the things that is killing all the day traders out here. So just be calm, just be patient, and you would eventually understand and know what and how the market works. Okay, so once you have a style, okay, select your instruments. Okay, now what is instruments and how do I select that, Srijit? I don't know. I've never experienced it. I don't know why do I can see, like I can trade whatever comes in front of me, right? Don't you think so? Yes, you can, my friend, but let's say you do now your morning routine is automated. Okay, you get up, you get out of your bed, go to your washroom, you take your brush, you brush your teeth, you take a shower, get ready, get out of the house. This is a fixed pattern that you're following, right? So now this is your home. So probably even on days when, let's say, you are blindfolded, and but still you can do majority of these tasks, right? So why is this? Because your body, you know you know every inch about your home. So it is important to have a small pairs of instruments, okay, which you look at every single day. Okay, so for me it's gold and euro USD. Okay, very simple, just gold and just euro USD. That's it. Keep it as simple as you can. Okay, now these two pairs are more than sufficient, because I actually want to, you know everything and every possible thing about how exactly gold works and how exactly euro USD works. Okay, so once I understand that, then probably I might. Why do I even need other pairs? Okay, these cryptos, these are my investments. Okay, so now don't just copy this, but these are my investments. I just, split some of my profit into cryptos. That's it. Very simple. Apart from that, I don't even look at other charts very easily. Okay, so know your instruments. Okay, probably I have two, you might have three to four. Okay, but I would suggest you don't go beyond four instruments. Okay, uh, probably one of the best instruments to trade is gold, Nasdaq, euro USD, and GBP USD and GBP JPY. Even this can be considered. Have one commodity and one currency, or probably if you want, you can switch between the index and the currency. Okay, it's completely your call. Okay, now gold is a high volume trade. Okay, it's a high volume commodity basically. So hitting your stop losses very might be very frequent on gold. Okay, so that is why I choose to have a currency pair where I can hold the trade a little bit longer, probably for an hour or two, and just get out of it once I am comfortable with the profit, or book partials and let the other trade just just flow. So that is the only reason I have kept Euro USD. It has volume though, but not as much as gold. Okay, so now we spoke about selecting an instrument, and then okay, this is one of the most important topics. Any guesses what the topic is gonna be? Yes, risk management. Okay, so I will explain you about risk management, and I will even share few of the risk management strategies with you. Okay, but not right now. Probably at the end of the video I would do that. For now, what I'm trying to say is, do not neglect risk management. Okay, it is very 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 important. Okay, so even if you have an edge, you build your trading plan, your psychology is in place, you have your control over your greed, anger, FOMO. Okay, but if your risk management is not in place, if you're not able to follow your risk management rules, brother, nothing's gonna happen. Trading is not at all gonna work for you. Doesn't matter if you're swing trading, positional, or day trading, or you're doing any kind of a trade. Okay, it's not gonna work if the risk management is not in place. So that's the major reason why risk management is very 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 important. Okay, so one more thing, what you can do, after risk management, I'll explain you a few rules about risk management. Okay, uh, before that, let's have a checklist of things you look at before the market starts. Okay, what are the checklist? I'll give you an example. Okay, this is my checklist. Sorry, this is my checklist. First would be look for the trend. Okay, second, okay, the first thing that you do when you come to your office is say hi to your friend, or do you directly say hi to your manager? I'm sure your friend comes first, right? So always remember, trend is your friend. Okay, so check the trend. Second would be look for, this is just for day traders. Okay, 4 hour and 1 hour OB. In my case, in your case it might be different. Okay, third, wait for market to reach your OB or FVG, fair value gap, and FVG. Majorly I focus on OB, so I'm just stuck with there. Yeah, no problem. Okay, fourth one, once you see a OB tap, okay, I just set alerts. I don't even look at the charts most of the time. So once I get an alert, I come to the market, I wait there, I sit down, I look for a market structure shift. Once I find that, then in the same leg which has crossed, which has given me the market structure shift, I look for a fair value gap or OB, mostly OB again, or sometimes even IFVG. Sometimes I don't trade on this most of the times. Okay, and then sixth would be breathe before entry. Just like I mentioned in the last video, just before I enter any trade, okay, I make sure that I take a long breath, because I know some people might find this very foolish, but it just helps you calm down. It just helps you to take a sensible decision rather than just, just entering the trades and exiting the trades without knowing anything. Okay, and it helps you to it helps you cut down your mistakes at least. Okay, and breathe before the entry. Once I breathe, I talk to myself about what I'm going to do in this trade. Okay, how exactly, what do I talk? I talk about my risk management. I say that okay, my regular risk management is 1:2, then probably I'll stick to that. I don't want to make any changes in this particular trade because it seems perfect for a 1:2. But at 1:1.8 there is an order block. Then probably I will cut most of my positions there, so that the price, if the price starts giving reversals, then probably it shouldn't hit my break even again. Okay, after 1:1 I might, or if I see an order block or something, I might move my trade to break even and stick there, and just hold the trade. I would even see if there's any liquidity zones nearby. If there's one, then probably I would just exit most of the trades, and I would just hold like 5%, like 0.05% of the trade, or probably I would book 95% of the trades basically. Okay, I talk about what I'm going to do in the trade and even risk. Okay, this has to be written in bold, I guess, because it is one of the most important topics, and I'm even going to know my risk management rules, and just enter. Okay, enter, sit down calmly, probably drink water or something, and once I'm done with that, then probably I'll just take whatever the market gives me. If it's a stop loss, no problem, it's a stop loss. If it's a target, wow, it's just 2% on the account, no problem. One trade is not going to judge my strategy. One trade is not going to judge my trading style. One trade is not going to judge me. So I would just stick to the market. I would be there patiently waiting for the trade to do its job. I did my job pretty well. I checklisted everything. Okay, so I'm good to go. Okay, so that's how basically you decide your checklist. And okay, now what has happened? You have a perfect edge. Okay, you know your goals and objectives. You know your profit loss target. You know your trading style. You know your instruments which you are going to trade on. You have your checklist in place. You have all the 5 key points. Okay, now let's say you're a new trader. Okay, let's say you have been trading in the market for a year or so. You have, sorry, you have checked, you have cleared, like you have all these 5 objectives with you. Now make sure that you go and evaluate your trades on regular basis. Okay, if you can see, trading journal. Okay, never delete. Can you see it's written here? Why? I don't want to show my journal for obvious reasons, but why do I keep this? Because the only reason is I make sure that I check all my trades. I make sure that I check all my trades. It is very, 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 very important, especially for new traders, or let's say for traders who have been in the market for a year or two. Why? Because it shows you what mistakes you have done. See, guys, in trading, right now at least you don't have a mentor or anything. Okay, you don't have a boss who you are going to report to. Okay, but if you would act like your own boss, if you actually want to work that way, then you have to make yourself worthy. Okay, And to make yourself worthy, accept things. Okay, write every possible thing in your trading journal. Write about your emotions, write about the reason why you entered the trade, write about what was going in your mind during the trade, before the trade, after the trade. Write everything. It's your journal. It's your journal basically. Okay, nobody's gonna see that journal. I write a lot of foolish things in my journal. That's the reason I don't want to show it. It's very simple. Okay, so write every possible thing, and when do you evaluate? Have a set target. Okay, let's say probably if you're a day trader, you want to evaluate your journal weekly. That goes 4 times in a month. Come on, spending an hour in front of your journal. Okay, spending 4 hours in 1 month, I don't think so. That's too much to ask for. But this will improve your trading style. Okay, this would actually make you a good trader automatically. You won't even realize that. Okay, so yeah, and this is very 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 important. Okay, now even know like at what timing you're making profits most of the time, at what time you're making losses most of the time, because I don't trade Asian session, as I mentioned in the last video, and that's the reason, because I've been hitting losses in the Asian session a lot, and even ICT doesn't believe in Asian session. But still, me being me, I did try Asian session for a long period of time, and didn't work out for me. So I just skipped that part, and right now I just trade London and NY. Okay, so now you even know why journaling your trades is important. Okay, so there are few topics which I wanted to talk about. Okay, majorly three topics. Okay, three topics. Now you have everything in place. Okay, every possible thing you are doing exactly and following your plan. Now what you are supposed to do? Okay, there are few market conditions which are supposed to be avoided. Okay, especially for new traders. Okay, uh, let's say there's a big news in the market. Okay, don't trade news, guys. Please, it's a humble request from me. Please avoid trading news. Why? It's kind of a gamble. Okay, you cannot predict the news ever. Okay, at least try to avoid trading during the news. Okay, avoid the first candle of the news. It's never going to help. It's either going to blow your account or probably make your account 10x. If you want, have a separate account for this particular news trading. Okay, it's complete gambling. Probably every trader would say that. Okay, fundamentals, yes, it can be accepted, but not for me. At least me personally, I would never believe it. Okay, so avoid trending mark sorry, avoid high news, especially. Okay, and avoid news is like, just like Trump got shot. So avoid such news, because gold might show a lot of impact during these news conditions. Okay, and there is one more market conditions that I want you guys to avoid. Okay, if I look at the 4-hour time frame. Okay, uh, let's say this market. Okay, look at this, look at this part. Okay, at least for a good period of time, market didn't move at all. This is like what, 12 hours, 2 days. At least for 2 days, market didn't move at all. Okay, so would you completely avoid? No, don't avoid completely, but at least manage your risk here. Okay, if you're trading on 1% risk per trade, cut down to 0.5 risk per trade. Okay, cut down yourself, because these market conditions would take most of your stop losses, and this is one of the major reasons that has been happening here in my broker house as well. Okay, and yeah, prepare your psychology. the very most important topic. You can even switch to the last video to know more about the psychology part. And just like I promised, I'll explain you few risk management rules. Okay. Okay. Hold on. I'm new to this. I'm sorry. Okay. Okay. Great. Okay. So have a very simple know your risk to reward ratio, first thing. And the second thing would be for new traders who have been in the market for, let's say, 6 months to 1 year. Okay, this is what you are supposed to follow: 0.5 regular risk. Okay, and 0. Sorry, 1% is your aggressive risk. Okay, why? Why? Because you're newbies. Okay, you are pretty new to the market, so just hold on. You would get a chance to go aggressive on your trades. Okay. I would suggest, if you're under 6 years, I would even suggest you 0.75 risk would be aggressive for you. Okay, for traders who have been in the market for, let's say, one year to 2 years. Okay, for you guys, 0. Sorry, 0.75% or 1% would be your regular trading, and 1.5 to 2% would be your aggressive trading. Okay, so make sure that you're well aware about these things. Okay, and for traders who are more experienced than 2 years, probably 2% would can be your regular trading style, and then probably 3% can be your aggressive. 3% is a lot. Trust me, it's a lot. It's a lot. That's like generating 6% of profit in just one single trade. So that comes with a lot of experience first. Okay, so if you're more than 2 years and profitable, okay, don't profitable for at least 6 months. Okay, so this can be your trading, your risk management. Okay, so now I wanted to talk about few topics. Doing your accounts, that's it, and it's always going to be there. Okay, so I hope you liked this video. uh, I'll talk to Tom probably if I get a chance to get more such content for you. I would love to do that. If you have any particular topics that you want me to talk about, don't forget to drop a comment down. Okay, I would love to share more knowledge about it, and I would even see if I can come down with more such videos. Okay, I have shared my WhatsApp link in the description. I would tell Tom to do that. Probably if you want, you can just join the free you know signals group. I just keep on sharing you know knowledge about how exactly am I looking at a particular trade, or a particular level, or a particular entry. I keep on sharing this on regular basis. Okay, so if you want, you can join that. You're more than welcome. I do not charge anything for any education content, or that is posted online, or for any trade ideas that have been giving in the group. Okay, so yes, thank you so much for watching this video. If you have watched it till here, I hope you like it, and you have a lovely day. Goodbye.